Thank you, Mark, and good afternoon, everyone. It is my pleasure to introduce our guest speaker today, Kathleen Savio, who's the Chief Executive Officer of Zurich, North America. Kathleen, and apropos of the Women in Infrastructure Award, Kathleen is the first woman CEO of Zurich, North America, and she oversees $16 billion in revenue, and she leads the largest division within the Zurich Insurance Group, which is a rather large global company with operations in over 200 countries and territories. Prior to being named CEO, she was president of Zurich's Alternative Markets, a business division, a unit large unto its own, which by itself would have been one of the largest insurance companies in North America. As one of the world's largest and leading insurers, Zurich has seen firsthand the devastation of natural disasters and what it inflicts on people, businesses, and communities. I'm eager to learn more about how they've developed practices and policies that leveraged public-private partnerships that are driving changes in how people and companies behave so that they can better manage and reduce climate-related risks. I expect we'll learn a lot from Kathleen's remarks. And it's so important that we do learn from each other. At IBC, our members are wrestling with the same issues around the insurability of at-risk populations. Here in Canada, insurers are taking a whole-of-society approach to flood mitigation. We're working with all levels of governments and directly with consumers to reduce risk together. And we're starting to get some traction. The federal government is committed to partnering with insurers to develop a new public-private partnership to address homeowners at high risk of flooding. Here in our province, we now have a Made in Ontario Environment Plan. Released last fall, it emphasizes adaptation and reflects many of our industry's recommendations. Premier Ford has appointed a special advisor on flooding, with a focus on better preparing the province for future weather-related challenges. In the next decade, governments around the world are expected to spend $90 trillion on infrastructure with an emphasis on resiliency, including nature-based solutions. So, we're making some progress, but I know that Kathleen will tell us there's so much more that needs to be done. So please join me in welcoming Kathleen to the podium. Kathleen?
Good afternoon, and thank you so much for the opportunity to join you today to discuss a topic as important as climate change and infrastructure. As an insurer that has been managing risk for nearly 150 years, Zurich views climate change as one of the most complex risks facing society today. It is interconnected, it is international, and it is intergenerational. As you all know, media coverage on climate change is ubiquitous. And at Zurich, we know it is top of mind for our customers. In fact, the 2019 World Economic Forum Global Risk Report showed that the three most pressing risks are climate-related. The WEF's Global Risks Perception Survey of nearly 1,000 decision makers from across industry sectors, geographies, and demographics shows that respondents believe over a 10-year period, extreme weather and climate change policy failures will be our gravest threats. So climate is top of mind for many. But for an insurer, it always starts with the data. $240 billion in natural catastrophe damages occurred in the last 2 years alone, the highest 2-year period on record. And less than 50% of those damages were insured. The Economist Intelligence Unit estimates that between $4 trillion and $14 trillion of the world's financial assets in 2015 were exposed to risks from the impact of climate change. And here in Toronto, you have your own proof point of escalating costs with your epic 2005 flood. That flood, like many others, was considered a 1-in-100-year event, which means that basically there's a 1% chance in any given year that an event like that could occur. It caused $500 million of damages that year. Then, only 8 years later, another large summer flood here caused more than $1 billion in damages. How time flies. These are not isolated facts. They're a pattern, a trend. Some are calling this our new normal. Recognizing these truths, Zurich has committed itself to fulfilling what we think is our responsibility to society. As an investor and as a risk manager, as well as being a globally responsible company, we know we need to help accelerate the historic transformation and transition that we must undertake to protect our planet for future generations, both in regard to building physical resilience to climate impacts, as well as enabling an accelerated deployment of low-carbon technologies that will help decouple the economy from excessive carbon emissions. Our journey began really in earnest in 2007, when we established our first climate office, focused on developing the products and the solutions to help facilitate the transition. We then began challenging ourselves through a series of different public commitments. First, the UN Global Compact in 2011, then the Principles for Responsible Investment in 2012, the Principles for Sustainable Insurance in 2017, and earlier this year, the Business Ambition for 1.5-degree pledge and the UN Net Zero Asset Owner Alliance. These public statements were intended to serve as beacons for our ambition and catalysts for our operational priorities. And as someone who has been with Zurich for more than 25 years, I can really tell you that these statements are serving their purpose. They're fundamentally resetting how we view our role in the climate debate. As I mentioned earlier, that role takes really two primary forms for us, as an investor and then as a risk manager. More than $200 billion in assets is what we have under management at Zurich. And so our investment decisions can have a significant impact on society and on the environment. We recognize that our responsibility comes with being a steward of such a large portfolio of assets. So we've developed a clear strategy for responsible investment, including both a reactive and a proactive approach to climate change. Reactively, we first need to protect our assets from the consequences of climate change risk in order to maintain our ability to pay claims. We do this by requiring our asset managers to integrate both transition and physical climate risks into their analysis. Proactively, though, we also invest in both climate change mitigation and adaptation opportunities. We started to invest in green bonds in 2013, and since then, we've built a portfolio worth $3 billion. And then on top of that, we've dedicated $750 million to green and social infrastructure and have committed additional capital to private equity funds that focus on clean tech solutions. Our target is to build an impact investment portfolio worth $5 billion, which will help avoid 5 million tons of CO2 and benefit 5 million people, per year. And to date, we've invested $4.5 billion in this way, so we're closing in on that commitment. A lot of these investments either directly or indirectly finance infrastructure. So for example, it could be the production of renewable energy from wind farms in the US or solar parks in Australia. It could be transmission lines that connect offshore wind parks in Europe to the mainland. Or it could be green bonds issued by Ontario, Quebec, or the Canadian Export Development Bank. Our impact data shows that the projects with the highest reduction of carbon emissions are those that add renewable energy generation capacity in regions with heavy reliance on coal. So areas like China, Southeast Asia, Australia. Or those that encourage people to leave their gasoline-powered cars at home and take an electrified train instead, especially in jurisdictions where that electricity is already low carbon, such as in France. Last but not least, we use our right as investors to make our voice heard and engage with investee companies and with regulators to advocate for responsible transition policies. Similar to the City of Toronto's recently strengthened net zero climate ambitions, Zurich's goal is to apply science-based targets to move our portfolio to net zero emissions by 2050, meaning that any carbon emitted by our investments will be offset by the carbon emissions reduced by other investments. These commitments are significant, and they require a foundational transformation of how we assess investment options. But as consumer demand for climate-sensitive investments grows, they will become mainstream for any responsible behavior. Where we think we can make an even bigger impact, though, is on the liability side of the balance sheet, through new products, services that facilitate, if not accelerate, the transition to a carbon-sensitive economy. For example, Zurich has a dedicated carbon capture and sequestration liability policy. We also have a growing portfolio of renewable energy business, Build Back Better endorsements, and other more traditional products focused on the climate marketplace. We're also assessing the establishment of climate resilience advisory capability for our customers as the growing awareness around corporate exposures, driven in some part by new voluntary regimes, disclosure regimes, like those recommended by the Task Force for Climate Financial Disclosures, prompt customers to seek access to our modeling and our risk analysis capabilities. In addition to developing new tools, we've also begun to review our portfolio of risks and identify the most carbon-intensive sectors for a deeper assessment of what risk management tools could be deployed to accelerate the transition. So this means that for those companies that derive a substantial portion of their revenues from thermal coal, oil sands, and oil shale, we'll engage in a deep dialogue with those companies over the steps they're taking to facilitate the transition to a 1.5-degree world. If we find that those steps are consistent with our own goals, we will partner with those firms to identify and develop the suite of risk management tools that'll be needed to facilitate that orderly transition. In some of those cases, though, we will redeploy our capital to other firms and other sectors that are committed to making the changes necessary to address climate change. We recognize that this position has caused some concern in certain parts of the Canadian energy sector. We truly applaud the firms that have engaged with us in a meaningful dialogue over the many steps that are currently being taken to balance the short and the long-term objectives of Canada's climate and energy policies. After all, we too have plenty to learn about innovative carbon-reducing technologies. And we're committed to working closely with our customers and all levels of government to ensure our policy is applied responsibly and in accordance with credible, science-based targets. But developing new products and renewing our portfolio for carbon-intense sectors are not the only steps we're taking to apply our risk expertise to the climate change challenge. We're also looking at how to deliver our analytics, modeling, and risk mitigation knowledge in ways that go well beyond a 12-month policy. For example, we established an award-winning flood resilience alliance with leading academics and NGOs to deepen the understanding of rural communities about their exposure to flood risks so that they could understand and better protect themselves, make better decisions around their risk mitigation options. To date, we've conducted detailed risk assessments in over 100 communities, with plans to increase our impact tenfold over the next 5-year cycle of the program. In addition, we've authored 16 post-event studies detailing the man-made elements of various natural disasters and issuing recommendations on how to reduce exposure to the ravages of climate-related risks. The most recent of these studies, which we conducted with the Institute for Catastrophe Loss Reduction at Western University, which I think is not too far from here in Toronto, focused on something I'm sure many of you are familiar with, the Fort McMurray wildfire in Alberta, which represents the largest single natural disaster in Canadian history. This fire, which took nearly a year to extinguish, caused almost $10 billion in damage and forced almost 100,000 people out of their homes. Our findings highlight the importance of risk awareness and the steps needed to enhance resilience, and hopefully will raise the decibel level of voices like Wood Buffalo's Fire Chief Jody Butts, whose relentless focus on mitigation will surely save thousands of lives and billions of dollars. Similarly, we're now engaging in discussions with the agriculture sector on the role risk management can play in advancing carbon-friendly farming policies, exploring how to leverage the multi-billion-dollar carbon offset market to drive nature-based resilience solutions for communities, and assessing opportunities to apply our expertise in ways that go well beyond the traditional risk transfer mechanisms. Building on the many steps we're also taking to reduce our own carbon footprint, these are just some examples of how we're pushing ourselves to redefine our role in addressing this existential risk that we will pass on to our children and our grandchildren. Critical to so many of these efforts is the role that public-private partnerships play in harnessing resources to tackle common objectives. For Zurich, climate change is the ultimate team effort, and we view collaboration across sectors and societal actors as fundamental to moving from paralysis to true solutions. One example of the P3 structure that we're proud of is the Insurance Development Forum, or the IDF. This is a consortium chaired by the World Bank, the United Nations, and the insurance sector that aims to deploy risk pools at a sovereign and sub-sovereign level to help families, communities, and nations access the financial resources needed to withstand climate risks. The Canadian government is also part of this consortium through their involvement in Global Insure Resilience Partnership. The IDF's efforts have started by focusing on capacity building so that local decision-making is better equipped to assess financing options and have brought together policymakers, regulators, funders, and insurers with the common goal of bringing insurance solutions to 500 million poor and vulnerable people by 2025. It is an ambitious goal, but one that must be achieved if we are to begin truly preparing for the climate change that is coming. And by the way, it's a goal that the Canadian government is also actively pursuing through its own development opportunities and activities, including support for insurance programs in the Caribbean, risk assessment initiatives in the Pacific Rim, and a host of other programs. Another example of a collaborative effort we're focused on is being part of a platform launched at the UN Climate Week in September called the Coalition for Climate Resilient Infrastructure. This coalition, which again consists of a multitude of insurers, investors, governments, engineers, and academics, aims to embed risk-aware and climate-sensitive analytics into major infrastructure finance and construction planning. The hope is that by institutionalizing such awareness across major funders, millions of dollars of infrastructure will advance risk adaptation and mitigation strategies over the next decade, effectively improving the resilience of millions and maybe even billions of people, particularly in the most vulnerable countries. And maybe one that's a little bit closer to home for many of you. We're appreciative and proud of the role that we played in actively contributing to the early stage launch of Infrastructure Ontario by developing innovative P3 surety bond structures. This cross-sector approach to building, financing, and managing public assets in a holistic way is precisely the type of collaborative, long-term thinking that will be needed to ensure the sustainability of today's infrastructure. So, in closing, I believe that the climate debate is expanding beyond just how to reduce carbon emissions to how we must address the steps we need to take to adapt to climate risks. For some, this suggests an acknowledgement that society simply isn't moving fast enough to address the climate crisis. But for us, it's simply the responsible thing to do. And we look forward to playing an active role in both broadening awareness of climate risks and developing solutions to manage those risks. For the infrastructure sector, the urgency of climate change will make it an imperative that long-term investments take into account the likely increase in both frequency and severity of extreme weather events. From now on, infrastructure must be designed to be physically resilient to much more frequent impacts of flood and extreme heat over their long life cycles. And in some cases, new infrastructure's sole purpose will be designed to support a region to be better adapted to these impacts. A textbook example of this is Toronto's own Don River and Portland's Flood Protection Project, which uses nature-based solutions to enhance resilience and facilitate development. Zurich believes we're moving past the era in climate change politics where we wait for government to tell us what we need to do. The SDGs, PSI, PRI, and the rest of the alphabet soup of initiatives and platforms are really there to do one thing: catalyze actions from the greatest driver of societal change that we have ever seen, and that is the private sector. Zurich is committed to playing our part, and we look forward to working with your sector closely as jointly we do what it takes to achieve our common goals. Thank you so much for the opportunity to speak with you today. It truly was my honor, and have a great rest of your day.